Hi everyone, myself Murugan. Happy to present another interesting video in the series of explaining intraday scanner for the day traders. If you look at EQSIS Intraday Scanner, you might notice a column called Open Study, which comes with a reasonable number of filters, which helps you to pick up a stock for the day trading. This basically filters a stock based on the opening price behavior of the particular day. So you might notice something called gap up, gap down. Sometimes you notice there is open low and open high. And you might notice weak bears and weak bulls. Very rarely you see, but a very interesting field called strong bullish gap and strong bearish gap. How at EQSIS we quantify them in these fields? That will be explained in this particular video. And I will also showing you how you can really get it from that particular scanner as well. If as a trader, if you wish to use this, you need to know how to classify them. So upfront, most of us can easily recognize that the left hand side can be quantified as bullish, the right hand side can be quantified as bearish. And if we start rating them, you can notice something like gap up and gap down, which is pretty much straightforward to quantify them as a bullish and bearish. So I'm going to give you 1 star for that. Whereas there is something called open low and open high, very popular among day traders, and it is not every day you see a stock forming open low, open high. It must be a special day for a stock to sustain this open low and open high. So for the intraday, for a momentum stock, sometime we may be interested in looking at that particular filter. So we're going to give you a 2 star for that particular field. And there is something interesting called weak bears and weak bulls. This comes along with the gap up opening and how that stock further behaved during the day. So this is interestingly the combination of the first two, but still we give you a 2 star rating for this because this is equally useful as if like open low, open high. But this is not very popular, so I'm going to talk about slightly in detail about that. And the fourth one, which is a very interesting aspect, called as a strong bullish gap and strong bearish gap. Here we use the term called 4 star rating for this. And if you notice why it is special 4 star, because it talks about indirectly gap up, gap down, open low, open high. And so it consists of various aspects as well. So we'll definitely see that in detail as I move forward. Let me first show you how you can first access these things and how you access this open study from EQSIS Intraday Scanner. So to begin with, let me give you a quick demo and then we can go and see those content in detail. If you take a browser, just go to EQSIS. Pretty straightforward. You find it's the very first link. Just get into site. And you notice analysis underneath something called Intraday Scanner. In one click, you get this tool right in front of you. And what I'm actually telling you is something called open study here. So if you look at this open study, you can click on show any so that it shows weak bulls, open low, weak bulls, open high. So you see some combinations are coming up. But if you notice here, there are only 3 available, whereas I told you there is something close to 8 options available. But first of all, it is not by default this open study is available. So if you want this open study column in front of you, what you have to do is go to this column selection, go to custom selection and make sure that this is selected. If you hide it, then this particular column is not visible. So by any chance, if you're unable to locate open study, what you need to do is go back to this area, go to the custom section and make sure that you click on open study and then this gets visible right in front of you. And by default, let's say if I have a filter based on day gainer, so now I see there is something called day gainer as well as there is a weak bulls. It means what? Bajaj Holdings is having a significant gains from the yesterday close, but today it is unable to sustain the gap. So I'll be talking about that. But of course, this is how you can access the parameters here. So if you want to pick up a stock based on open low, just take this open study here and click on open low. You get only one stock today, which is Bharati Airtel. If I click onto the stock, you can notice that this is what 1 minute charts. If I put it 5 minutes, let's say this is how the stock opened here and today it is trading here. It sustained the open high so far. Look at this. It managed to sustain the open high so far. You can easily notice this here. But how to read these filters and field, that is what I'm going to spend some time going forward. So I'm sure this is a video exclusively for open study. Let's again go back to the content to explain things in detail. How to filter a stock using intraday scanner. Let me start from the very first thing called gap up and gap down. What we mean as gap up and gap down. Let's say, let me take a tool here. Sometimes you notice a stock is trading like this, okay, I'm talking about daily charts. Okay, now this is so far as a daily frequency, and today let's say the stock is, this is how the stock closed yesterday, and if today either a stock opened at higher than the yesterday close, if I use the term higher, eventually 5 paise is also higher, but we might have quantified them as more than a percent, or sometime a stock opens significantly lower. That percentage can also be dynamic because based on how many other stocks have significantly opened. So on that grounds, you get to know the significance of gap up. So it tells me that this many stocks have gap up and this many stocks have gap down. So what this gap up and gap down tells us, there is something really happened overnight. Today the stock opened at a higher level. Why the stock opened at very higher level when compared to the previous day close? What might have happened between the closing and opening? I'm sure some positive surprises or negative surprises have taken place. I'm using the word surprise because yesterday 3:30 market is not able to discount that factor, and today morning when market opened, it straight opened higher or lower. Possible things can be the global markets, stock specific events, or any a national level, or probably at a macro level some news announcements might have happened. But how one can make use of it? Remember, if it is a gap up or gap down, it is going to be a surprise to the equation of existing demand and supply. So how market consider that? Sometimes the gap up and gap down induces the short covering. Sometimes the gap up and gap down becomes a trigger for the breakout to happen. Sometimes the gap up and gap down couldn't sustain and it actually fails. So we just want to have a stocks which are based on the gap up and gap down, so that we can limit our hundreds of stocks to focus a very few to take things further. So this is a very common filter among the day traders to know what stocks have witnessed a significant up or significant down. So straightforward, gap up is a positive surprises induced at overnight. So most likely if there is much of short positions tends to get covered, the price can further go up. So this is a stock need to be noticed. So in during the day, if you see the stock again forms a higher bottom, higher top kind of a structure along with the gap up, probably that is a stock which we need to look at for the day trading. Same vice versa for the gap down because it's a negative surprise. So long positions gets unwind because the margin pressure, margin triggers sometimes can happen. So for that you need to see the daily charts as well. That's why you can notice that there is a daily chart even at EQSIS Intraday Scanner. So if I move forward, next one, which is open low and open high. I think this is a filter needless to explain much because it's already very popular. Many of the day traders were already using it. So at this particular video, I'll be telling you that this is also available in EQSIS Intraday Scanner. So this is also a part of how the market opened during the day, how it managed to sustain the opening level. But remember, open high, open low doesn't mean it is a gap up or gap down. Okay. Probably a stock opened at par with yesterday close, but surprisingly it couldn't break that low. From that moment it started moving up. Most of the time in the morning session around 9 to 10 o'clock, if you notice, out of 100 stocks, there are about 10 to 15 stocks managed to sustain the open high, open low at the early part of the day. But how it managed to sustain beyond 10 o'clock or 11 o'clock, or how many stocks managed to sustain things that after the European market opens, all matters a lot. Because when we did a kind of back testing, we noticed that these filters managed to perform reasonably well towards the later aspect of the market, not at the very beginning aspect. It is not a surprise because we all know that at a very moment when market opens, all 100 stock must be equal to open high and open low at the very first minute first trade. But how it managed to sustain that open high and open low? If someone is very new to this open high, open low, let me dedicate for a minute. Let's say a stock opened at 100. Right from that minute, it started trading anything above 100, but it did not break even 5 paise below the open. That tells me that it is so good in retaining that open low. Okay. So what does it indirectly tells me? That open is equal to low, then probably the stock is not able to break that low, whatever it happened at the open. So it indicates a kind of bullish behavior. And of course, the open high is the an indication of bearish behavior as of now for that given day. But if it sustains the open high, it is interestingly. So sometimes open high, open low is good to even place your stop loss. So in that context, you can consider. But you make sure that the market direction is also in line with your expectations. If not, sometime it breaks because even after the open high, we noticed many times that the stocks behaved the bullish as well. So the performance really coming up well towards the later aspect of the day, not at the very beginning aspect of the day. If you ask me, Murugan, when are you planning to publish those interesting success ratios, how it works? Definitely, it is all part of the plan in our this playlist. So as you notice now, every week we are planning to post one video talking about each and every filters, and then we will be talking about some combinations, and later we will be talking about the success ratios, what we have, what quantitative models we have used to come out with those success ratios as well going forward. Let me again move forward with respect to weak bears and weak bulls. I think this is a section which I have to talk slightly in more detail, because weak bear and weak bull, what does it mean by weak bear? How excess really quantified them as weak bear? This is very important because it is not universally practiced a term called weak bear, but weak bear you can really understand that the bearish move is not really strong, it is actually getting weaker. Okay, so indirectly weak bear is telling me that the probably market is gaining strength here. How you can take this context? Let's say a stock opened on a gap down, okay, gap down. So ideally that stock should further grind lower, it should start heading lower. By any chance, if such a stock started recovering and filling the gap in the same day, that tells me that the negative surprises in the market, instead of creating unwinding pressures for the long position, this invited bulls to come and find the price attractive. So although it is a bearish day for the stock because it is a gap down, but unfortunately that particular gap got filled at this moment. So such stocks, if you want to know, I think if you notice something called gap analysis, there is something called exhaustion gaps. So these gaps are quantified as a weak bears and weak bulls. This is a very interesting parameter because you know that the stock have opened very high today, but right from the first minute it has started heading lower, 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 and it is managed to fill the complete gap. It lost the gap what it happened in the morning. That shows there is a weak bulls because the bulls are not good enough to sustain the gap up which happened today. So that nature of stocks may be a good to short when it is actually bouncing back. Am I right? So again, all the open studies are quite interesting towards the later aspect of the day, but this is not something which appears right at the morning, because right at the morning it is after all gap up and gap down, and subsequently how it behaved is also tracked, and if it filled the gap, then those stocks comes under the basket of weak bulls and weak bears. So this is a very interesting parameter to consider. Hope you will definitely find this very useful when it comes to building your trading strategies, because this is very useful in forming a day trading setups. And at last, a very interesting, very powerful, very rare phenomena. We have noticed occurrence is very rare, so we don't have enough sample size to prove the ratios. But interestingly, it is working out. Let me talk about strong bullish gap and strong bearish gap. Okay, at Axis we use the term strong along with this for a simple reason. See, it is not only a gap up or gap down. It is a gap up and gap down along with open low. Let's say there is a gap up along with open low, and such day is also higher than the previous day high. Okay, now notice a gap up doesn't mean the stock has to be above the previous day high. It's just significantly higher from the previous day close. But if it is a strong bullish gap, you might notice that the stock opened way higher than the previous day high, and the open is also equivalent to low. That is also surprising, and it managed to sustain and managed to move forward. It is a gap up, open low, and interestingly, it is higher than the previous day high as well, right at the opening. So there is a clear bullish indication, bullish surprises from the market, and this also interestingly tells me there is a short covering started happening, and this is a stock may be good for a short covering scenario to take place. A big bull day or a big bear day is quite possible because it is a runaway rally sort of a scenario is taking place. I hope I've explained on what parameters Axis is quantifying these things, and you definitely try them once, twice, thrice. Plan your trades for about next 1 week or 1 month and see how it is really working out. Is it something helping your trading system or not? Then include in your trading system. So hope you find this session useful. If you find this video was really good, kindly share this video and a few more people who are interested, few more people who trade with intraday. This motivates both the those who are finding this video as well as the people who are developing this content, because this motivates for us to come up with the next video. And I'm sure we have a very big agenda in terms of talking about all these scanners and filters. End of the day, you get to know these some probabilities, some combinations, what alert system you can set up, in turn helps your trading system better. I believe you find this video so far really good. So if you wish to use this, make sure that you study them really well and test it well, and make sure that it also constructively work with your trading system and start using it. And if you like this whole video, make sure you like it as well. That gives us a positive feedback. And do share this, because it acknowledges our work and it motivates and it spreads some words, so that we also be motivated to come up with a lot more interesting videos. See you soon in this next week with another interesting video with that special filter. Thank you.